Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Dr. Ayodeji Ebo, an investment professional. This week, the focus is on the upcoming MPC meeting, key considerations and expectations. This week, the Central Bank of Nigeria, CBN, is scheduled to hold its 299th Monetary Policy Committee, MPC meeting on February 19th and 2025. This important gathering was postponed by 1 week to accommodate the anticipated rebasing of the Consumer Price Index (CPI) and the Gross Domestic Product (GDP) figures. This adjustment will ensure the discussions are based on the most accurate and up-to-date economic data available, enabling committee members to make more informed and thoughtful decisions. Here are key considerations. 1. Inflation trends and CPI rebasing. As of December 2024, Nigeria's inflation rate escalated by 34.8%, marking the fourth consecutive monthly increase. This surge has been primarily driven by heightened demand during the festive season and significant rises in food and non-alcoholic beverage prices. However, the federal government has projected an inflation rate of 15% for 2025. The MBS plans to rebase the CPI, updating the base year for 2009 to 2024. This adjustment aims to reflect current consumption patterns and price dynamics more accurately. The rebasing is expected to influence inflation metrics and could impact monetary policy decisions. 2. Economic growth projections. The National Bureau of Statistics (NBS) is rebasing its GDP calculations by changing the base year from 2010 to 2019. This adjustment aims to provide a more accurate representation of the current economic structure and activities in the country. The new calculations are expected to be reflected in the GDP numbers for the fourth quarter in 2024. The committee will weigh the trade-off between controlling inflation and supporting economic growth. Any aggressive rate hikes could dampen investment and consumption, potentially slowing economic recovery. 3. Foreign exchange reserves. Projections indicate a gradual increase in foreign exchange reserves, bolstered by anticipated growth in oil production expected to reach 2.3 million barrels per day by mid-2025. This uptick is poised to enhance the CBN's capacity to manage currency stability and address inflationary concerns. The MPC will discuss the measures to sustain the stability of the FX market in recent weeks. Anticipated MPC actions. Given the current economic indicators, the MPC will be facing a challenging decision-making process. The CBN has previously raised interest rates multiple times to combat inflation, most recently increasing the monetary policy rate (MPR) by 25 basis points to 27.5% in November 2024. We think the tightening cycle may have peaked. As a result, we believe that the CBN might choose to maintain the current MPR in the upcoming meeting to allow more time to evaluate the impact of previous adjustments along with the rebased inflation and GDP figures. Thank you for listening. Please join us same time next week for another exciting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 07082463747. Stay blessed.